And I always say that I think everybody should do what the smartest guys in the room on any given topic are doing for themselves. And so since 2008, we have seen the global central banks pile into gold, and the last several years at the highest level ever. Now, when you look at a relative performance chart over, say, the last year or last 200 days, you see, I believe that we are in general in the melt up phase of this trend cycle. But what you also see is that gold and silver, silver's outperforming everything at the moment, but while everything is rising, you're seeing a rise in the spot silver and the spot gold markets at a significantly higher level relative to the performance of anything else.
I think that mainstream Wall Street firms are all just followers of each other, and they follow each other in a circle, and they just run after each other faster and faster. And that's what the business cycle really is. It's just a bunch of copiers following each other in a tighter and tighter circle, chasing each other's tails. It's like, instead of one dog chasing its own tail, it's just a bunch of dogs chasing each other's tail. And once the dog sees that somebody's tail is, over here, it'll just change, and then the circle will go to another direction and start spinning in another area. Do we have a long way to go? The answer is yes and no. We have a long way to go in terms of consciousness. This is sort of like a monster, maybe roaring in the background, and you turning around and saying, what was that? And maybe you were a little bit scared, and you think that you don't believe in Bigfoot, but maybe there is a Bigfoot, and you don't know for sure, and you're not going to discount all of the theories anymore. But in terms of time, I don't know if we have a lot of time. We have a lot of consciousness changing, but consciousness can change very quickly. That's what hyperinflation is. It's one day credit is money, or credit works, and the next day it does not. And the main point that I want to hammer here is that when gold does things like this, there is the general confusion among the mainstream media. They're like, oh, gold, we don't know why it's going up, but it's generally a safe haven asset and an inflation hedge, and that's why it has historically done that, and so people are going back to it because they always have, and we don't have any other answers other than this is tradition. That's not why. The answer is that gold is money right now. It always has been money, and all the other stuff is credit, and credit is based on money. The purchasing power of credit is based on money. You cannot have credit without it first being based on money, and all the other credits are credits based on the main credit, which is the US dollar, which is based on money. Everything connects. And that's why it's described as an inflation hedge, because it's just money that isn't inflated.
The mainstream view frames gold as an inflation shield, an insurance policy against paper currency collapse. But this narrative obscures something more fundamental. Gold and silver are not hedges. They are money, timeless, non-dilutable stores of value. Credit systems, by contrast, rest upon money. When credit weakens, it flows back into tangible money. In volatile moments, people may begin substituting the word gold for dollar in their mental models. In that substitution lies a new paradigm. Credit is ephemeral, but money endures. This shift in perception could reshape financial behavior overnight.
Now, I would challenge the viewers of this show, and your viewers generally, and my viewers, and Lynette's viewers, to play this little experiment in their head. Instead, in any sense that you could use the word dollar, that you could use the word money, instead of saying the word money in any sentence that you say, or any sentence that you hear said on the media or from your friends, instead of the word money, instead of the word instead of the word money, just use the word gold or silver. Just use that. And then you'll see how everything fits into place. You'll see how the gold and silver are the money. They're not an inflation hedge. They're just money that's not inflated. And as credit loses value, it loses value into money itself. That's what's happening here. The mainstream media doesn't get it. The people don't get it yet, but they think that maybe Bigfoot is real. Maybe the stackers are not totally insane. Maybe this is going to happen again, as it's happened every single time without exception. Every time credit collapses, gold goes to infinity in terms of that credit. There will not be an exception this time. The only difference this time is this time it's global, and this time it's everything, and this time there are no escapees.
And I always say that I think everybody should do what the smartest guys in the room on any given topic are doing for themselves. And so since 2008, we have seen the global central banks pile into gold, and the last several years at the highest level ever. Now, when you look at a relative performance chart over, say, the last year or last 200 days, you see, I believe that we are in general in the melt up phase of this trend cycle. But what you also see is that gold and silver, silver's outperforming everything at the moment. But while everything is rising, you're seeing a rise in the spot silver and the spot gold markets at a significantly higher level relative to the performance of anything else.
Since the 2008 crisis, global central banks have increasingly piled into gold. This isn't speculative, it's structural. Over the last 5 years, sovereign institutions have broken records in net gold purchases, amplifying their monetary ballast. Today, dozens of central banks actively manage gold reserves, shifting away from pure dollar allocations. The decision is as much a geopolitical statement as a financial maneuver. Nations are preparing for a world in which trust in debt-based reserves is no longer assured, and gold is rising as lifeline.
So what I think that's moving those markets is the smart money, and I think that really started at the beginning of this year when we had this huge influx of the physical gold and physical silver into the U.S. So I think that this is nothing new. I think it's just becoming more visible, and that it will now trickle down to more of the masses.
I think that mainstream Wall Street firms are all just followers of each other, and they follow each other in a circle, and they just run after each other faster and faster. And that's what the business cycle really is. It's just a bunch of copiers following each other in a tighter and tighter circle, chasing each other's tails. It's like, instead of one dog chasing its own tail, it's just a bunch of dogs chasing each other's tail. And once the dog sees that somebody's tail is, over here, it'll just change, and then the circle will go to another direction and start spinning in another area. So do I think that Wall Street will always chase the asset that's going up? Yeah, they seem to do that. That doesn't take much smarts to say, oh, well, now gold. Well, let's do the experiment that I recommended doing at the beginning. Like, instead of saying gold, say money. Instead of saying, when people usually say money, say gold. When people usually say gold, say money. So if money is at an all-time high relative to dollars, then should you go after money instead of dollars? Yeah, I mean, it's not going to. You don't have to be so smart to do that.
One vital clue lies in relative performance. Over the past 200 days, silver has outpaced many asset classes, while gold continues to gather strength. Smart capital is moving into physical markets, underscoring that this isn't a speculative mania, but a recognition of structural value. Meanwhile, ETFs backed by bullion have added hundreds of tons year to date. Gold recently pierced the 4,000 OTS barrier, a psychological threshold fueled by inflows, weakening dollar trends, and geopolitical jitters. These are not random fluctuations. They hint at building conviction beneath the surface.
And do I think other people will start to chase money also when they realize that dollars are falling? Yeah, I think they will. And that is what hyperinflation is. It's when everybody realizes that they need money because they don't have any, and that the price of everything is falling in terms of money, and the price of everything is rising in terms of credit, in terms of dollars. So everyone will chase money at the same time. And at that point, we should be like, maybe now that everyone wants money, we should maybe buy some stocks. We haven't gotten there yet, but maybe I'll be the first gold bug or money bug to say, I think gold. I think it's enough gold. I think the whole banking system is now kaput, and let's go after some assets that aren't money now. Maybe I'll be the first one. Maybe I'll be like, among the handful of the first ones. I'll leave. I'm not married to being a gold bug or anything.
Well,
Well,
Lynette,
I'm not,
your thoughts? Yeah.
well, I'm not married to anything anyway other than we are inside of the life cycle of this fiat money, whether it's US dollars or euros or yen. And so again, I think that there is a lead that the central banks have put in place, and I think that Wall Street is starting to recognize it, because one of the big shockers to me was seeing how openly Wall Street is talking about the debasement trade. And so if they're now talking about the debasement trade, then of course we're going to see outperformance in spot gold and spot silver. But I'd like to emphasize right now that even though technically they are overbought,
When public belief in paper money begins to shatter, the rush toward real money intensifies. Historically, every collapse of credit has pushed gold's price toward extremes, without exception. Now, this dynamic is playing out on a global scale, with fewer escape points and no isolated markets. As credit erodes, more individuals are likely to pivot toward tangible stores of value. The last man standing may be gold. And when culture, politics, and money all intersect in crisis, it's in those moments that the narrative around gold will shift from fringe to central.
fundamentally, they are still critically undervalued. And who would know this? The central banks would know this. And I do think that Wall Street is starting to follow that lead. And I'd also like to take you back to the last shift in the early 80s, in the 70s, and then going into the early 80s, when Wall Street then as well got on the gold bandwagon and even established some funds with collectible coins. Wall Street's always got to make a buck. They've got to find what they can push up. And if they are openly talking about this debasement trade, that's going to continue now because there's no other option. And so there's no doubt in my mind, especially entering a hyperinflationary phase, if we are indeed in that melt up phase where you're going to see everything go up, well, that's when gold and silver on the spot market really perform. But nothing performs as well as when the public loses confidence, and we're seeing that more and more. And that question of confidence here in the US, the confidence that the government can come to terms and actually work on something together. Never have I seen it this divided. And what that does, whether it's politically intentional or not, is it further erodes that confidence level. And that's the only thing that's holding it together anyway. So it makes a lot of sense watching Wall Street beginning to participate and then encouraging their clients to participate, because they want to live to play another day. And if you use up all the principal, guess what? You got nothing to play with. And so what will gold and silver do? What it's always done, create that bridge to get from one currency and that reset into the next currency. And I think it's beginning to be recognized, but I don't necessarily think that that's a brand new thing, because we've already been watching those big box stores here in the US, like Costco and Amazon and Walmart. They're not carrying gold and silver because there's no demand from the public for it. So this isn't actually something new, but I think that it will, the rise when prices go up, that encourages more participation, because fear of missing out. And I don't frankly care how anybody starts to get involved in the metals markets. Just get involved, just own it. And you know me, I'm a physical gal, because we're in this transition.
We live in a transitional era. In 2025, gold's rally is not just continuing, it's gathering legitimacy. Analysts project further gains through mid-2026, fueled by persistent demand and continued inflationary pressures. Yet risks remain: corrections, rate shocks, or shifts in confidence could interrupt the ascent. Investors are counseled to diversify, not just gold, but complementary commodities and assets. But the broader lesson is clear. As credit strains under its own weight, money in its purest form may reemerge as the anchor of a fragmented financial order.
Lynette gave me an idea when she said lose confidence, and this is just something that just occurred to me. It's true they lose confidence, but there's not a net loss of confidence, because they lose confidence in something and that confidence shifts into something else. But it shifts into something that whatever it is that they're losing in is based on. Because let's say they lose confidence in the government, they lose confidence in the debt, they lose confidence in treasuries. That confidence is not lost, it just moves. What does it move into? Because what is a treasury? A treasury is the promise to pay dollars. And what is a dollar? A dollar is a promise to pay gold, for God's sake. That's what it is. It still is. That's what people don't want to understand. They don't want to come to terms with that. It still is right now. Dollars are a promise to pay gold at 42.22, which cannot be fulfilled. So now it is a promise to pay gold at whatever 4,056 or whatever it is. But once everyone wants to take advantage of that promise, it's not going to be fulfillable at that promise either. So the confidence is lost from the treasuries and it moves into gold. So the purchasing power shifts from treasuries holders and everything that's based on treasuries, which includes stocks, down into the gold and silver holders, which is where the purchasing power sinks into. And then all of a sudden we can buy everything and they can't buy anything.